Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. And happy Friday. It's February 10th. My goodness gracious, where has this year gone? It's about 7:22 in the morning. I'm actually getting an early start. Wanted you to get your video or my video or your video or whoever's video out earlier today because it is Friday, and I'm excited because the weekend is coming up. Now, the NASDAQ is down about 140 points. The Dow's down about 130 points. Nothing really crazy, but as you could see here, I'm looking at the Russell right now, but if you look at the QQQ, they look very, 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 very similarly. They both are on a downwards trajectory. Now, I usually end with the Algo corner, but I want to show you how impactful Algos have been and how much distortion they've been doing. So Algos usually go for the lowest hanging fruit. The lowest hanging fruit is the small cap stocks. So the small cap stocks, if you look at the ascend above the 200-day moving average, you will see that the biggest ascend, the biggest upside, wasn't really the QQQ, it was the Russell 2000. Look at the Russell. If you look at it, let me go back a couple of years, you'll see that it really broke out. If you look at the QQQ, let me just give you the QQQ. I think it was second place. See, it's much smaller. This is the 200-day moving average. Look at the distance between the 200-day moving average and the activity, and now look at it on the Russell. So remember, Russell stocks have smaller market cap. Because they have smaller market cap, they're easier to manipulate. They're easier to move around, right? I mean, imagine an algo trying to move a stock like Chevron, okay? And then imagine it trying to move a stock like Pinduoduo or, I don't know, a small cap stock. It's easy. Well, my favorite stock, Dish. You guys know what I mean. But the point is, look at how much upside the smaller ones got, and then look at the SPY. You'll see less and less and less. See smaller difference. And then if you look at the Dow, you will see that the Dow hasn't really moved at all. See that? Well, the Dow stocks are the hardest ones to manipulate by algos. They're the most difficult ones. Think about it. You've got stocks like Chevron. You've got what was the other one? Healthcare, top healthcare stocks. You've got stocks that have $1 billion of market cap. I mean, look at the constituents. We don't have to guess. McDonald's, Microsoft, Home Depot, Goldman Sachs, United Health. These stocks are not as easy for the funds to move around or the algos to move around. So you have a lot less deadening here than you do in something like the IWM, which is so easy to move because there's nothing here that has a market cap of over 10, 20 billion dollars versus 150, 200 billion, real big moves. So when you're looking at algos, it's very, very important to compare what the small caps are doing in comparison to the Dow Jones, because the odds are the big manipulation is not happening on the Dow Jones, it's happening on the Russell. So if you see the Russell getting completely out of whack compared to the Dow, you could tell that the algos have been doing some crazy stuff. Because remember, these things are very correlated in the short term, and in the long term. But in the short term, they're very correlated. A couple of weeks, couple of months, they should be very correlated. But the Dow has been going completely sideways, right? But the small caps, look at this thing. This thing went from 162 to 199, all right? And the Dow, I mean, just same area we were. Look at that. What is it? 33,600, 33,007, nothing. So the algos, so when you're watching the algos and you're watching for the algo movement, one of the best things you could do is take two stocks. Take a stock that is a large cap stock like Chevron, all right, if you're looking at energies. And then take a small stock like Joy, right? It's a global, here, what is that? Joy Energy. Let me find it for you. Let me get it for you here. Journey Energetic, here we go. See, very, very choppy, very, very choppy. Whereas something like Chevron actually moved a little bit more. So again, Keep your eye on, always compare how a small stock is doing compared to a large stock that's doing the same thing or in a similar industry. And you will see what the algos are doing, because the algos are much more impactful to the smaller stocks than they are to a larger stocks. Now, let's get into our analysis, okay? So I wanted to explain that to you. I wanted to start off. I was thinking about it all night. I was thinking, what's a good way to explain it to you? But that is. So the futures are down about 136 points right now. The bond via the TLT. Now, we don't use, a lot of folks are asking me, why do you use the TLT? Well, most traders don't trade futures anymore. They trade ETFs, and the TLT ETF is like a long-term bond. So you could see right here, it's now breaking the 50-day moving average, and it looks like it's going to come down. And remember, the more it goes down, man, I wish I sold it right here, but it didn't go to 110. So I'm looking for this to cool off. And as the bond market comes down, interest yield increases. And if interest yield increases, it puts more pressure on the tech stocks. So on that note, let's talk a little about earnings overnight action, and I'll tell you what's hot, what's not, and what we can expect next week. So rising bond yield bolstered fears of a looming recession. Isn't it amazing how fast things could turn from no recession, we're coming up, soft landing, to a recession? It's amazing how Wall Street just like that, Communication services, utilities, and basic materials were hit hard, which makes absolutely no sense because utilities is a defensive asset. Communication services is not. In Thursday's session, shares of Alphabet were one of the biggest drags on the market, extending losses from the previous session to fall over 4%. They have a huge market cap. Their AI chat box delivered inaccurate answers in an online advertisement. I mean, can you get more embarrassed than that? I mean, that's so embarrassing. Financials also weighted on the broader market, pressured by a drop in bank stocks as the yield curve between the 2 and the 10-year note inverted by 82 basis points, the deepest inversion since the early 80s, triggering fresh worries about the economic outlook. And folks, I'm telling you, absolutely nothing changed from 2 months ago. We're still in a crappy economy right now. Labor Department reported employment, 196,000, very, very solid growth. It's been between 190 and 225,000. It's been one of the most calmest and most consistent indicators this time. We may see the jobless claims go up a little. Not the jobless, the report that shows how many people are now working. We may see that number actually go higher because all the people who've been laid off by the tech companies are getting rehired. Richmond Fed President Barkin said on Thursday the price pressure remains elevated and the Fed needs to stay the course to ensure that inflation comes back to the 2% target. Very, very simple. On the earnings front, you had Pepsi-Cola go up 1%, AbbVie closed over 2%, PayPal rose over 1%. So earnings are okay, but again, a lot of folks were expecting earnings to overshadow the economic conditions. Not only are they not overshadowing it, they're worse than expected. Today, all eyes are on the U.S. consumer sentiment, the Michigan consumer sentiment. That'll be very important, especially in light of the downside trout we are seeing. In Europe, preliminary GDP data on Friday showed zero growth in the final months of 2022, meaning the British economy, again, narrowly avoided entering a recession. When you hear words of recession in Europe and in America, barely avoiding it, that's not a time for the market to stay above the 200-day moving average. And China closed lower after data showed that consumer price index grew less than anticipated in January, while factory gate prices dropped further. The light reading points to a longer than anticipated rebound in the country's activity after the relaxation of the anti-COVID restrictions, which is what we expected. Japan closed higher. Data revealed producer inflation retreated slightly more than anticipated, but remained close to a 40-year high. In terms of pre-market movers, there's a lot of them today. You've got Lyft, you've got Expedia, you've got Cloudflare, you've got Bloom Energy. There's a lot of stuff going on today that we need to pay attention to, and we're going to have a lot of volatility. Now, looking at the indices, just to give you an idea of what's going on here. Ooh, look at that. We're down. It looks like we're going to open lower and head a little bit higher as the day goes on, which typically happens when the market opens this down. I'm expecting this consolidation to continue with lower lows and lower highs, finally taking us down to the 200-day moving average and then breaking it. But we may still be able to get a little bit of upside in the next couple of days. So don't be concerned with the imminent, meaning Monday, Tuesday. I think it'll be okay, but I think we're going to cool off. Again, we're already below the low on the S&P. We're already down 0.59. The market is looking like it's pretty weak. And look at how close we are to the 200-day moving average. And if anybody's telling me that I didn't say this or warn you or said it wasn't going to happen, you know better. We still have technology and communication services leading. I'm anticipating by the end of next week for this not to lead, and I'm expecting consumer discretionary also to cool off. A lot of the sectors, I shouldn't say that. Utilities have 3% of stocks trading below the 50-day moving average. That's a very defensive sector, and it needs to rise. Consumer staples only have 24%. Let's see if it's rising or falling down. It's kind of just flat, just kind of silent. It looks like it bottomed out, which is a good thing. And I think consumer staples and defensive sectors are going to start moving higher. Let me give you a picture. Consumer staples, healthcare, utilities, I think they're going to start moving higher. And technology, communication services, and consumer discretionary are going to be lower. Now, if you want to sell this market, look for stocks that are hitting the 200-day moving average and are kissing it goodbye. For example, let me give you a good example. See how Tesla is almost at the 200-day moving average and now it's coming down? Those kind of stocks. And look how overbought and it's diverging. So that's what you want to focus on. And again, as I mentioned earlier, if you want to see the impact of Algo, take two stocks, take a really, really big stock or ETFs, big ETFs, and take a small cap and look at the distorted difference between the two in comparison to the moving average. And you'll get a really good idea of what the algos are up to. Now, before I let you go, folks, Saudi Arabia suddenly increased oil prices Monday from its customers in Asia. The European Union and the U.S., that's not an easy news to swallow. But the thing is, towards the end of 2022, Jeff Zananeri said this was going to happen. I remember it like it was yesterday. I was on there with him when he was saying it. The perfect storm is brewing for a 21st century catastrophe. This is a catastrophe. And this could be the chance to get in front of what might be the life-changing market news. Folks, you need to be on top of this. And Jeff is getting ready to go live today, Friday, the 10th of February at 10 a.m. Eastern Time to reveal his number one way to capitalize on this looming energy crisis. Follow the link below, and we'll see you there at 10 a.m. Eastern Time today. You don't want to miss out. Jeff is red hot. He's great at his global economic outlook is fantastic. He traded for a hedge fund. Follow the link below. You don't want to miss out. It's happening at 10 a.m. Eastern Time today. Don't miss out, and I'll see you soon. Bye. Oh, yeah. Follow the link below in the YouTube channel if you don't know where the video is. Like us in the YouTube channel and subscribe and post comments, and I'll respond. Bye.